Financial stress in the United States has hit all-time high levels. How can that be possible?
But the president said the economy's the best of all time, JJ. What are you talking about, man?
We're going to talk about a survey that points to Americans' financial stress levels, and yes, they're at all-time high levels. We also are going to talk about the student loan debt situation, and student loan defaults have increased again. We're almost now at 11% of all student loans that are either 1, delinquent, or 2, delinquent and in default, meaning over 90 days late. Not so good numbers. So let's go ahead and get into it here. And this is kristv.com, kristv.com. We're going to link to all these articles. Americans at all-time high stress levels financially. Anxiety levels up with debt. Debt, anxiety pretty much go hand in hand for most people. I'm sure there's some people out there where debt doesn't bother them. It's just digits on a screen. It's just numbers on a piece of paper. But if you're someone that doesn't like being in debt, or someone that's trying to work extra jobs or work overtime to pay off the debt, it can be very stressful. Not only that, if you have family or loved ones and you're struggling just to keep a roof over their head, that can be very stressful as well. This survey, this study out of the National Financial Capability, shows over 50% of Americans are stressed when it comes to thinking about their finances. And the generation that feels the most burdened or financially stressed is the millennials. And we're going to tie that into the student loan debt situation here in just a moment. The first issue, or the biggest part of the stress, is lack of savings. Now, I think this comes in several different parts. A big part of it here, in my opinion, is people spending on luxury items and things that they can live without, honestly. A lot of people traveling, taking vacations, choosing to spend money on entertainment. An example recently would be the Super Bowl was sold out, and hopefully a lot of them were not millennials with massive student loan debt. But in America, people love their entertainment, and we see some of the most well-paid people in America are people that really don't contribute a lot to society. They're entertainers, and we look at the sports figures, we look at the actors. They make sometimes millions and millions of dollars, and what do? They sit there and they pretend, or they act on a screen, they throw a ball around. But Americans, we love to give our money to millionaires just to watch them, and we like to be entertained. So I think that's a big part of the problem. And Daniel Scantarelli, the district advisor for First Command Financial Services, essentially says the same thing. He says, quote, "They spend their money before they pay themselves first." But it's not just all frivolous spending or entertainment spending. The cost of living is really zapping these people very harshly. The rising costs of just about everything. We live in an inflationary environment, and that is the goal of our banking system, is to cause inflation. They even state it in their description out of the central bank. There's an inflation target. They are meant to cause rising prices. That is their goal. That's one of the reasons why when prices start to fall, you see the Fed come in and start doing intervention into the markets with stimulus, with bailouts, with repo operations. For example, the repo crisis, we saw the overnight lending rate from bank to bank start to jump, and that would have caused banks to have a more difficult time borrowing, and that would have also caused the banks to have to pass along higher rates to the consumer. Now that they're currently doing that with credit cards, but the repo crisis would have bled over into a lot of other areas, including car loans and even mortgages. Not so much with the non-bank lenders, but the bank lenders that are regulated with the reserve requirement. It would have affected those banks. The Fed says rising prices are great. And remember, we talked about 70 to 80% of people live paycheck to paycheck. Well, here is the stat again out of this report. This individual says about 20% of the struggling age group, millennials, do save money, but the remainder live paycheck to paycheck. So millennials, 80% of millennials living paycheck to paycheck. All right, and just go back a few decades, back to the 60s, 70s, and even the 80s. It was very easy for households to get by on one income. And we talked about this in our previous report. We now have most of the new jobs being created are to females. So we have to have, in a marriage situation, both couples working just to get by. In some cases, still don't get by, still under debt with two people in the household working. And this is very simple. It's because of inflation and higher prices, the higher cost of living, and wages simply are not keeping up with the rising prices. And millennials, they come out of college now and they see home prices are 5, 10 times higher than what they make in a year. Back a few decades, it was not that drastic. You could buy a home sometimes for just 2 or 3 times, sometimes even less, but 2 or 3 times what the average annual salary was back then in many cases. And also it points out here that millennials especially are not planning financially. It's rare to find someone that establishes a budget, that sticks within their budget, that chooses to not spend money that they don't need to spend. And it's pretty easy to see. You go to a nightclub, you go to entertainment venues, concerts, you're going to see a lot of young people especially spending money on, let's say, drinks at a nightclub or a bar. It's very common to see them $5 or $10 depending on your taste. Right? People, they could cut back. There's a lot of things we can point to in society that people can go without. The example of the nightclub, entertainment. Well, it's kind of a double-edged sword because one of the reasons people don't want to save money is because saving money doesn't get you anything. You can barely make any interest on it because interest rates are so low. So it gives a lot of these people, especially a lot of the younger people, the mentality of if I don't spend it now, whatever I'm going to spend it on later, the price is going to double, so I might as well spend it now. Right? So maybe that plane ticket, maybe that vacation, instead of costing $300, maybe it'll be $600 in 3 years. I better buy it now. I better spend now. Right? So that's what inflation does. It throws the need to save or the urge to save out the window. I think people still need to save because the more people spend, then the more prices go up because people are out there throwing money around. Right? We are in a spend now, we'll pay the price later. And when it comes to expensive drinks, maybe people are drinking more and spending more because they're so stressed out. All right, next up, let's talk about student loans and student loan debt statistics. This is a recent article here out of Forbes, and it's telling us some not so good news as far as the delinquency rate. We're almost at 11% now. And it's a total combined for delinquencies and or defaults, and it's considered a default once it's 90 days plus delinquent. So out of all the student loans, almost 11% are either 1, delinquent, or 2, big time delinquent, over 90 days late. That is a very big percentage. Compare that to foreclosures in the housing market. Foreclosures make up less than 1% of all homes. So you can see a very big disparity there. Even homes are very expensive now. But compared to student loans, it is nothing compared to that. And for all we know, this repo crisis and all this liquidity being pumped into the banks could be going to student loan companies. We don't know. It is not a transparent financial system, and the Fed is not a transparent institution for us to actually know. The jobs are not paying enough to keep up with one, foolish spending, combined with the rising cost and inflation and things that people have to spend money on, such as transportation or housing, and combine that with no incentive to save, you have a very stressful debt situation. So I hope you're not one of them. I hope you're not stressed out with debt. In fact, I hope you're out of debt and staying above water. That way, when the next downturn hits, you'll be financially prepared. And it's just healthier not to be stressed out and not to be in debt. And maybe you're someone that has debt and just not stressed out about it. It's just numbers. You can file bankruptcy. You're just going to live life, have fun, not worry about it, and just run up those credit cards to the max and be happy the entire time. Swipe with a smile. Thanks everybody for watching this update. Hope everybody has a good weekend. Might put out some videos on the weekend, maybe not. But thank you for being here. Bye for now.